Hello traders, Damien here. Wanted to cover the Gartley pattern on this short video here. I'll show you the example on a blank chart, and then we'll move in price action to show you the most current one that some of you may have been a part of. But it starts off with a retracement of, well, we have an anchor leg that puts in a main swing, and then we have a correction of that which becomes a dominant swing of around a 61.8, which is the ideal Gartley pattern. The reversal zone for this particular swing is here. This is the margin of error for this swing. We also have we next measure this leg right here. So we have at this point it could be an ABC pattern to the downside, or depending on where it corrects here, we're looking at a different pattern. And that is the difference between the Gartley is when price fails on that ABCD pattern completion and finds support in this area right here, then we're looking at a potential Gartley pattern. So until that happens, we don't know exactly what we're looking at. So the key area to look at on a correction of this area, which is also an aggressive C, and if you're going against order flow, that's why we take profit here, because price could find support here on a Gartley. Okay, and that is one of the reasons why against order flow we take profit here. With order flow we look for a continuation to the downside. Excuse me. So we find a correction of price to in and around this area. This is the ideal area, and this is the margin of error, okay, that I use with this pattern. And then we look for two things. One is confluence of a 78.6 of the main swing, and also a 127 extension of this B to C leg. I'm sorry, A to B leg. So we're going to draw that right now. And as you can see, the confluence is right there. Now had this traveled deeper into this zone, our extensions would have been up here. So now we have a price reversal zone that's this big. Okay, and what we do is we take an extension of this. I mean, we sorry, I drew it a little too precise there. And we take that, we copy and paste, and we look for a perfect ABCD pattern completion. So in light of this, because this extended deeper and this became shallow, this overshot our price reversal zone. But what do we have to do? We have to include that. We have to include that in our price reversal zone, as there is a harmonic expectation that an ABCD pattern will complete up in this area. Does that make sense? Now, had price stayed here, then that wouldn't have been the case. We would have been looking at a okay. So that's where we're at with the actual pattern. There's an aggressive selling opportunities here, which is the aggressive C of a regular ABCD pattern, and there's an aggressive buy here, which is an aggressive C buy for the pattern completion, and also an ABCD pattern. So there are opportunities here and here to capitalize on the whole pattern. We'll cover those as we progress. I just wanted you to get the basics of the actual pattern. So I'm going to move in price now. We're going to remove all these tools up here, and we're going to scroll price in. And I don't know if you can see the pattern. It's pretty obvious on the screen, but we have a main leg here, okay, that we're going to draw Fibonacci retracements on. change the color of that. Okay, and as you can see, price came down, came up into the aggressive C area here. This is the area we target for this pattern to make it valid, and we did. So you had an opportunity to do an aggressive C sell for a possible ABCD pattern to the downside. Okay, now we have here is this swing high to swing, this swing low to this swing high, has another aggressive buying opportunity here. Okay, so here we have validation of pattern, and here we have a validation of pattern. So if you didn't feel comfortable taking an aggressive C buy here because of the order flow to the downside, that is fine. You're looking to get this pattern completed somewhere up here. So we have the 78.6 right here, and we also have, we're going to take the extension of this leg and to see where that ends up. Beautiful, 127 extension. So what we have here is our price reversal zone is in here. If we draw our harmonics here and we drag it up, we see the price completed as expected. You also have some structure here. So all of these things point you to a potential reversal of this pattern into this area. And sure enough, price respected the pattern, respected the harmonics, and started working his way down. Now, as far as profit targets, we trade this basically just like an ABCD pattern because there is an ABCD pattern here. So what we do is we remove these fibs. Just delete all that to make it easy on your eyes. And we take from the low to the high, okay? And we see that had you entered this trade up here where you were supposed to enter, you would be sitting on a break-even trade and looking to capitalize on take profit here or trail on structure, however you decide to manage your trades. I like to not be in these trades for weeks and weeks and weeks, or days and days and days. My preference now these days is to, get in, get out. I don't like to hold trades overnight anymore, especially over the weekends. I just have simplified my my life. I don't need to worry about when I'm at home playing with my kids what the market is doing. I really don't care. So this is pretty much it. Had you taken this trade somewhere in this area here, right now you would be sitting on about 98 pips of profit and at break even. So that's a wonderful thing. Depends on how aggressive or not you want to be, and what's acceptable for you as far as giving back to the market. Another option that you can do here, and you would have to incorporate this into the rules, is if price finds support at the 38%. Okay, notice I'm using if and then. If price finds support at 38 and starts to retrace back, I will take profit at 50% of the distance between my entry and the 38. That way you don't walk away, with a break-even trade after you achieve 98 pips of profit, or you may decide the 98 pips is good enough for you and you're going to take profit and that's it. That's fine too. Either way, trade management is entirely up to you. I'm just letting you know how I do it because I've seen price dance around in this area like it did here and continue on downward and continue on downward. That's basically it. I mean, the pattern is pretty simple. You all are somewhat familiar with it already. You've been enjoying it. Some of you more correctly than others. I don't get too picky on the rules because I understand that I trade these based on my rules, and as long as the pattern conforms to at least a general generic form, I will not criticize you. But these are the rules that I have found offer the best risk reward in my hands. So with that being said, this is about it. Let's see, what else can we cover here? I think we're good. Post your questions, concerns, comments, critiques, and we will address them. And hopefully we'll get a lot of chart examples and a lot of things posted so we can start, nailing this one down. I feel confident and comfortable that you guys have pretty much become very comfortable with the ABC, D, and the AB equals CD, and I've been pleased with the overall progress of that. So that's about it for now. Thanks, guys.